Ladies and gentlemen, welcome back to the channel. We have some massive updates to bring you on the government shutdown, the state of the economy, and potentially stimulus checks. Are those going to be inflationary? Well, we'll talk about that in today's episode. The stock market could be set up to have a really good week this upcoming week if the government can reopen. Now, it looks like as soon as tonight or tomorrow morning, that could be happening, and this is what we need to get stocks moving in the right direction, because right now Wall Street is starting to price in a recession, and we need the government open to even see, hey, how is the economy doing? And we haven't had that now for almost 40 days. So we have some exciting news to bring you in today's episode. The only thing that I ask is you hit the like button as well as subscribe to the channel. If you have not done so already, check that link out down below in the description of today's episode. If you guys want to come join the trading community, and really what we're doing over there is finding the next 1,000%er AI stocks that Wall Street is overlooking and investing in those, okay? I don't want to buy the hypiest stock on this market. I want to buy the stock that nobody sees coming, okay? That's how we've been really early to a lot of stocks. APLD, we invested in that at $3. IONQ at $7. Nebius at $22, okay? Many other examples, I actually bought the Palantir IPO at $10 a share, okay? Tons of examples of this. Novitas at $1 and some change, okay? But there are opportunities in this market still that Wall Street is just completely ignoring. And we are seizing those opportunities with a 12 to 36 month time horizon. These are not like stocks we're buying for a week. These are medium-term holds for us. If you guys would like to come join us, check that link out down below in the description of today's episode to get involved with the community. But with that said, let's get started. Now, okay, Again, in terms of what is going to pressure the government to reopen, okay, it's not cutting Americans off food. Like, the government could care less about that, okay? That's unfortunate. I think shows a major problem in politics, but something like this is really the main pressure on the government right now. Transportation Secretary Duffy warns that air travel will be reduced to a trickle, with flight cancellations worsening as the shutdown drags on. He says ahead of Thanksgiving, if the government is not opened, yeah, good luck flying anywhere. It says here flight cuts could ramp up to 10% next week, as Duffy had warned they could reach 20%. So this is where the pressure is coming from on, from a political perspective. Now, also the quote-unquote economic harm that is being done, we're going to get into that in just a moment, also putting a lot of pressure on the government to get the situation resolved. Now, in good news today, China Commerce Ministry suspends the 2024 ban on approving exports to the United States of dual-use items related to gallium, germanium, antimony, and super hard metal materials. So that's seen as a positive step in terms of trade relations between our two countries. Donald Trump said on Truth Social today, he says, quote, "Pay the people, not the insurance companies." Donald Trump announces a $2,000 tariff dividend for Americans. President Donald Trump announced a $2,000 payment to most Americans funded by U.S. tariff revenues. In a Truth Social post, he said the U.S. is collecting trillions of dollars in tariffs and will use the money to reduce national debt and reward citizens, excluding high-income earners. Trump called tariff critics, quote, "fools," and claimed the U.S. is now the richest, most respected country in the world, citing record stock markets and 401k value. Which, there's going to be some people that say, these tariff payments could cause inflation, and there's definitely an argument to be made there, but there's also an argument to be made that the tariffs are being paid by American companies, right? As much as people say China's paying the tariffs, American companies are paying the tariffs. So it's really like a distribution from companies to Americans in the most simplistic way possible to explain it. Which in theory would not be inflationary. You really only get inflation via the late Milton Friedman when the government prints money and gives it away. That's what gives you inflation. theoretically taking from companies and giving to Americans should not be inflationary, but we would see. Palantir's CEO said something very interesting. He says, quote, if fentanyl was killing 60,000 Yale grads instead of 60,000 working class people, we'd be dropping a nuclear bomb on whoever was sending it from South America. That's a way of putting it. Scott Bessent today says the impact of the government shutdown on the economy is getting, quote, worse and worse. Bessent says that making substantial progress on inflation and expects prices to come down over the coming months. Donald Trump says, quote, Democrats are terrorizing Americans with the government shutdown. He says, quote, I'm sorry the American people are being terrorized by Democrats who shut down the government to keep Obamacare subsidies, massive giveaways to health insurance companies, and a disaster for Americans. Insurers' stocks have skyrocketed, while premiums have more than doubled. The money should go to the people for better health care and real competition. It's time to stop enriching insurance companies and start lowering premiums. I'm ready to work with both parties once the government is open. Stop terrorizing Americans, end failed policies. Which, it's kind of outrageous to think about it, but only 20 million Americans are benefited from the ACA tax credits, or the insurance credits, which is the reason why the government is shut down, but yet 42 million people rely on food assistance. That just doesn't make sense to me why they're fighting over that when other things are being harmed a lot more or to more people. Now, Hassett says GDP could be negative in the fourth quarter if the shutdown drags on. Now, this is the big news today. Bipartisan discussions are ongoing, and Senate GOP will conference early afternoon, a Politico reporter on X said. Now, the White House today ordered states to reverse SNAP payments. Now, on most betting markets like Kalshi and Polymarket, the expected length of the government shutdown is around 50 days. Well, we're on the 39th day today, and it looks like the government is probably going to reopen by tomorrow morning, and this is going to be seen as a big positive for the stock market, and we'll explain why in just a moment. But first, Hassett says the U.S. shutdown shaves 1.5% off GDP. That's a lot, okay? Hassett says prolonged closure could push Q4 negative. Hassett says that real consumer spending power up $1,200 under Trump versus a $3,000 drop under Biden. And you can see here, Democrats are ready to advance bills that may end the shutdown. At least 10 Senate Democrats may support advancing bills. Senate Majority Leader John Thune, which is a Republican, says the deal is coming together. Just in, a deal in the Senate to end the government shutdown is within reach. Multiple sources from both parties tell Axios. And this is kind of the outline of the deal as we understand it. Number one, the Senate could vote as soon as tonight to reconsider the House-passed continuing resolution, a procedural step requiring 60 votes. The final package will replace the CR, continuing resolution, with a new one, funding through January 30th, plus a 3-bill minibus. Without a time agreement, this could take several days. Most Senate Democrats are expected to oppose the deal, but the outcome is ultimately inevitable, though any senator could delay the process. But normally when you're starting to get headlines like this, you're probably going to get a deal done. You're probably going to get the government reopened, and this is going to be massive for the markets. Number one, because a lot of people are expecting this is going to drag on for a while. Number two, you start to stop the economic harm that is being done. It's kind of impossible to estimate exactly how much damage is being done out in the economy, but we can say for sure it's not great. Like, having the government shut down this long is definitely an economic burden, okay? How much damage is being done, that is really hard to say. And number three, we start to get economic data again. Now, I don't know exactly how it's going to work, if we're going to have to wait till the next jobs report to get the last 2 jobs reports, or I don't know exactly how that's going to work, if we're going to get all of the data on one day, or you're just going to have to get to the next round of data and then you're going to get all 3 at once. But the fact of the matter is, on Friday, the estimate for the jobs report was negative 60,000. That is really not good. That's pretty recessionary-like numbers, okay? But the odds are pretty good that the situation is not that bad. Okay, if it's worse than that, we obviously have a problem. But I think it sets us up for an upside surprise in the economic data and from the market's perspective. Stocks have been selling off, small caps, AI, mid caps, like we're in a recession or very much going into one. Whereas the economic data might show, sure, things are not wonderful out there, but we're probably not in a recession. Okay, so that's why getting this government shutdown resolved could be such a positive for this market. Now, this also comes at a time in which the markets have been so bearish recently. The CNN Fear and Greed Index is sitting at 21. You're in extreme fear. At one point, it was around 15, which is almost as bad as it gets, okay? Market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is neutral, safe haven demand is fear, junk bond demand currently in extreme fear. The AI Investor Sentiment Survey has been bearish for a while now. I mean, for the last month, you've been between 46% and 36%, which is historically very high for the amount of bears out there. And neutral investors have been in the range of 20.3% to 25.8%, which the last reading we had last week showed a lot of neutral investors and a lot of bearish investors, whereas the bulls are only at 38%, which is pretty low for a historical bull market, or even when you look at the S&P, for the S&P to be so high and there be so many bears and neutral investors, it's kind of impressive. Stocks have on the index level have held up so well. Now, the percent of stocks trading above their 50-day moving average coming in at about 38%. That's pretty much like correction-like levels, okay? So under the surface, you've pretty much already experienced a correction. I think that's where a lot of the pressure is really coming from on the government as well. Like, the government doesn't want stocks to crash, okay? That's not good for their political donors. That's not good for their political futures, okay? Inevitably, they're all going to be blamed for the government shutdown. Republicans maybe a little bit more, just because people blame the president as a default. But to have the stock market crash, that's a big no-no. And you are starting to see a lot of pressure get put on this market. So again, I kind of put it all out there in today's episode. We've been waiting for the government to reopen. I think initially, once the government opens, we get a rally in markets. But at that point, it becomes the question of, how bad is the economy, okay? And I'll tell you right now, the expectations are way up here, or I should say way down here, okay? We were expecting a negative 60,000 jobs report. If it was negative 50,000, that would be a positive surprise, and that's a really bad number, okay? So the way I'm looking at this is, boom, we get the government reopened, that's positive. Boom, we start to get economic data. Even if it's not great, it's probably not as bad as feared. And let alone hyperscaler earnings were good. AI is alive and well. November is seasonally the best month for stocks. If we can just get the government open, we could be looking at a pretty damn aggressive rally to the upside in markets, especially in some of the more beaten down areas, some of the, recession vulnerable areas like small caps, like AI, and like hypergrowth, which is probably where you are investing as well in your own portfolios for obvious reasons, right? That is where the growth is. That is where the opportunity is. But lately, those areas have gotten utterly destroyed, and I think we can start to make quite a comeback into the end of this year in the month of November once the government does reopen, let alone stimulus checks or anything like that. That could be interesting because, as we talked about earlier, you're basically taking money from the business sector and giving it to the consumer, which in theory should not be inflationary. Inflation is only ever caused by long-term persistent inflation is only ever caused by the government spending money and printing money, okay? That is at the root of it what causes inflation. This would be like a redistribution, which, call it a weird form of capitalism. It's a weird situation. But yeah, Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel, and check that link out down below in the description of today's episode if you guys want to come join the trading community. Have a great rest of your day, and I will see you in the next one.